All right, everyone. This is Monday night Q&A. I am running the call. I got my assistant with me, Jason England, tonight. So we are. Um, if people don't know who I am, I'm Clayton Sorensen, Cash Money Clay. They call me here in the group. So if you guys are brand new to the call, welcome. These are definitely the calls to be on too. Is these Q&A calls? Definitely learn a lot from them. We love to help people out. Love to help see the wins, see how people are doing. Too. So um, tonight we are gonna go over reversal trading strategy that I came out with the group and stuff. The 4 steps. We'll go over that. And then I'm gonna go and help you find TP zones. We want to make sure, if we're getting our potential on our trades, getting the most we can out of a trade, going to hitting those TP areas, finding those. That is very key, very important to find. And then we're gonna go where we're gonna have work on some stop loss stuff, moving stop loss up to break even, onto break even or up into profit just a little bit when you're running here. So if it does turn and go the other direction, and you don't have your stop loss moved up to a little bit in a profit, you're going to take, if you don't do that, you're going to take that loss. You're going to lose money. If you have it up into profit 25 pips or so, you're not going to lose any money. You actually come out just a little bit ahead. And then you fight another day. You go look for another trade again, get into another trade. So that as simple as that on that part. So what we're gonna do, we're gonna get I'm gonna share my screen. We're gonna get right into it here. Get it show on the impulse scanner here. Alrighty, here we go. So first is all is, as we all know, we trade gold on the impulse scanner. Obviously, this is our true bread and butter of everything right here, what we do in the markets. So what I'm going to do, I'm going to go back a little bit here if I can find a good area on reversal trading here. Give me 1 second here. It's not a lot of there's no reversals today in the market at all. So it just kind of, it did what it wanted to do today, for sure. It was just going down and then sideways. And that was about it today. That's all it did. But here is one back in here a little bit. We're gonna have to go back early this morning a little bit back in here. So what is a good indication of the market gonna make a reversal? Okay, we're gonna look at this structure, this area right here in the market, right here. So we're gonna actually, first, all of what you do, we've been on you're on a downtrend here. So we've been on a downtrend for quite a while, all the way down for quite a few hours, over almost 2.5 hours about. Besides, it's took a reverse. So everybody's wondering, how do you mark this trend line up here? The very key thing is, we're looking, so we had a high here, created, went down and low, never broke up above a high. So this is actually still the high yet over here. It never went back up and went back above it. So this is the overall high in the market. This never broke above it. So this is telling us, so it breaks down here. This is a low, and it still goes, so this is lower high. It just kind of keeps working down. So where we want to start this is back up in here. So we go. So it depends on, this really depends on, okay, how steep is it? Does, we could go from here. This is one possibility you can go off of right here in the market. So you can go like that. I'm going to turn this down just a little bit. I don't know, maybe that's too much. So basically, you're coming off here, and you're waiting for it to go here, like that. That is actually like your best scenario one right here on this one. You could go in a little steeper if you want. Let's try this here. I mean, I don't like doing this. I don't like it where it's too steep into the market. I like it, you can actually go to here with it if you wanted to. You could go something like that in the market here too. So this is actually two different step way you can actually do this. There's no right or wrong off of this one here. This one here, you gotta still wait before the line crosses back over the red anyway. Okay, so you got that one. I'm gonna have both of them up here so you can see the difference in this. So the other one was like right here, overall going back up to this top here and never touched again until back here. So this one here is telling me, okay, before it shot up above this top line, trend line, it shot up, got up here, guess what it did? It basically, it did a little retest, so that is an actual, like, it's respecting imaginary line here in the market. There's a little bit of structure back here in the market in this area too, which it was respecting. So that is actually a good place. Actually, this would be my better one, actually, is this top one. Yes, it looks a little far out, but it's actually better. You could actually take this trade here. You would actually take this trade at the same spot if you would had it at this top line and the bottom line. You'd have to take this trade at almost the same spot. Period. You'd have to. There's no way around it. It would be in the same spot to take this trade. So both of them here are absolutely the same. It doesn't really matter. Following the steps. Okay. So what we're gonna do, we're gonna do the steps on this here too. I'm gonna show you the steps. So guys, here's a good thing. So you got your trend. Okay, you got your markup done. Our first step we want to look at indications of a reversal in the market is what we're looking for. Okay, so a lot of it is watching candles. Okay, we want to watch what candle is giving us a good indication is to reverse in the market. Well, we have this one. We have an engulfing candle down here. We got one down here. I mean, it didn't really give us a whole lot. This actually too, and I have to get this a little bit bigger. This red candle here, beside this blue one, is actually indicating sign of a reversal in the market. This wick is longer than the candle body itself, so it's only a third of what that is. So that's telling us that this thing is actually, that's a one step that is a reversal happening. Okay, number two on this one, depending on what line we go by here, the top or the bottom, this crosses here, crosses and close above our line, right? Same thing with this one, cross below, above and above. Sorry, crosses above and close and opens above our line. That's two. Okay. Line crosses over red. 3. Now, time we're down here already, I can't show arrows back this far in the market, but you can tell when it's up in the blue up here, gonna have up arrows, correct? That's just the way it is. So we would have been starting to get up arrows back here, probably around this red candle back here. We start getting up arrows. That is number 4. That's what we want. We want 4. We have to have those candles or those up arrows. Have to make sure we're building strength to go up. We're up in this blue, which means we're getting the momentum of buyers coming into the market to push this market up right now. So basically, boom, lines across, crossed here, crossed, and basically you're gonna say, okay, it closed here. All right, we could hop into a trade right when this one closed out. We could have got into the market, right? We could have got in. But as a way too of knowing, the right way of getting into this market, it could have pushed us up. This could be more than, you could do whatever stop loss you're doing here, depending on your stop loss. Let's just put it in, because we're gonna So say we got in the market and it pushes about like right there, and then we're up about, depending on where you're at, because if anybody does a 50, they're going to get stopped out, right? That's what I normally do, is a 50 pit stop loss. Okay, I would have got stopped out of this one. Some people would have been down here back at this blue down here. The blue line would give, a 76 would have opened it up just a little bit, more of a breathing room, for this rejection to happen in the market, and you would have been fine, and it would have took off on, it would have went up on you, so it would have been fine. You could have even come down to the red. It would have opened up to like a 90, 91 range in there a little bit. You would have been fine too. So there's different areas where you could set your stop loss. You know, like me, I probably would have been a little patient. Like would have been patient with this trade, just in case like a wick does like that happens. I am very patient with it. Sometimes if you guys look, sometimes it does dip down just a little bit, but I still stick in the trade because I know which way it's going to go. I know which way the market's going to push. You know, that's why if you guys really look at it, it's going to tell you. So if you do like a 50, you would have got stopped out. Definitely would have been stopped out down here on this. That's what I trade. So you would have got it there on that. So those are the 4 steps. So let's do a little review of the steps here quick, okay? First one, we're looking for a reversal candle down here. We got 2 of them actually here. That is telling us this thing is going to actually go up, reversing in the market. That's one. Our blue line, we got up arrows. So we had up arrows probably starting around pretty close to this red one, red candle down here, and this big one here would have been an up arrow. So that's 2, okay. And then blue line crossing back over the red, that's 3. Pretty much, we want to make sure when this blue line crosses over the red, we got to make sure you have a gap in there. You don't want it to close and still close and be on that line. That's an indicator that it does not know what it's quite going to do yet. When it does that, you do not pull the trigger on that trade. So this tells you right here, okay, we gave, it definitely opened it up right here on this candle. It was still tight there. You could have been over here on this red one and got in on the red, would have been fine. Okay, blue one, or the one where I said to get in, quite hasn't opened up far enough yet. If you would have been patient and waited another one, that would have been an even better entry over here on this red one. If you would have got in here, if I would have moved this over to here, so you got in there, you would have been fine, no problem with the 50 pip. It barely moved, just did a little pullback, and boom, it was taken off. So that's basically your entry right there. It's okay to get in on a red candle like that right there, because it barely moved. And a lot of times these red candles will go down and retest off these lines and reject and go, and then reject and go back up. Lots of time, most of the time it does it. If they keep continuing to fall, you gotta be ready to get your stop loss. You gotta get it set right away. So that's basically, your 4. So blue line crossover, we broke and closed above this here. Take that trade, get into it. Okay, that's basically what the steps are. Super easy to do, because all the time, no matter what, if the market's going up, market's going down like this, and then it reverses to go up. If it's going up, it's going to reverse to go back down. It just has to. The markets move in waves, and they move up and down in patterns. That's how the markets move. They don't flow straight sideways. They don't go straight up forever. They don't go straight down. They actually move in waves and patterns. So that's basically how that went. This one is a good reversal trade right here. Like me, I would have probably had this bigger, the top one, drawn in there, because I would have seen this a lot and I would have took this off this top one. I don't like the flatter part of it. I like the bigger. Like I want to see the movement happen. I want to see stuff going. We would have had, like this smaller one we had in here. It had to cross this line, had to cross above the line, and we're still not kind of like the blue line's not over the red yet. Right here it's already going through it already. We just need a confirmation when it closes above our trend line. That's what's basically what we're looking for.
Hmm.
All those steps, and boom, there we are. We're taking it. Too. So, hold on here 1 second. Met some people into the. There's some people in the waiting room.
Sorry about that. I was concentrating on what you were saying so hard I forgot to look.
You're all good.
So I'm going to ask you a question
Yes, sir.
since you're teaching, and I'm looking at this. So I've done this two different strategies, like you were talking about. You have the lower line, which is before the blue crossing over the red,
Yep.
and then you have the second line. Is it more? Are you more likely to see the full reversal if your trend line is above the blue crossing over the red? Does that question make sense?
Are you
So
are you talking with the bottom trend line or the top?
no, your top trend line.
Okay.
So you're in this scenario, your steps where you saw the reversal candle, you got blue arrows, your blue crossed over red, then you crossed your trend line.
Yes.
And I've traded reversals. Those last two steps, I've traded reversals both ways.
Yep.
Where it would have the trend line could have been lower than the crossover. Um, is it? Are you more likely to keep trending in an uptrend if your trend line is actually above the crossover of the blue and the red,
Um. Good
or is
question.
it just? I mean, I don't know. I'm just
No, 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 no. Good, great. No, that's a good question because that is at times like this here. This here. That's a really good one because you got to think though too. Let me put this back in here. Let me put it back in quick so I can right around in.
I'd have been a little lower actually because it would have been before the cross.
Yeah, hold on here. I think I went off the wrong one.
Yep,
Right there.
correct.
Yep. So basically, like this here. So you you're still when the lines are still crossing over. It's all about timing when you're getting into the market, right? So this basically right here is telling you, like, yeah, it broke above and went across, but my blue line hasn't crossed back over my red yet. Okay,
Right.
where till it got gap, till where you got gap at, because you want gap in between your blue and the red line. You got to have space in there. If you don't have no space in there, like this one right here, this candle, let me get this out of here. So this candle here, how much?
Mm.
Look at the space in there.
Yeah, there's barely any gap at all.
Barely any. And I would have been still like hesitant to take it yet off of that. I would have been waiting off of this. I need to see something like what this red candle was here to see that space happen into the market. So no matter if you say we take this bigger trend line out, you're still taking the trade up here.
Gotcha.
you know, and I mean, you can't, if you're really 100% positive and you're going to snipe this thing and without following a step, which I don't recommend doing, you're going to have to get in this trade before that blue line crosses over the red, you know,
Okay, that
to,
makes sense.
to catch more pips, what you're saying, to keep that thing to go keep trending up. Okay. So to me, I always like to watch that blue line to make sure it's a confirmation. It's crossing that blue line's crossing over that red, no matter what.
Okay, cool. Thanks.
You bet. So let me go to the chats quick before we move on to the next step. When you draw a trend line, do you look for a certain amount of taps or touches? Well, that's a good question. That is a good question. I like that. So basically, when I'm doing this here, I'll walk you through this here. So basically, I'm off this red part of the candle, okay? So when it's going down, we're looking for pretty much the red candles back down. But you want to touch red back down. When it's uptrend, you want to touch blue candles going back up, okay? So the red candles, you want to go red. And so basically, like right now, I'm only getting one other touch across the top of that. And a lot of rejections down here in the market of wicks coming up to it and rejecting off of it. So it can be just two touches like this. So basically where you first start one there, you got one touch, if you want to say that's a one touch. And then but basically you have two actually. So you got one there, one here, and then that's what you got. That's fine. If you have multiples, multiples are actually even better, really, to be honest with you. That's even better. It shows you better of a trend of respecting that line. So you know it's actually respecting that line in there. So this is actually this is actually good to have these more touches to them. But like when they come up and wick this too, it's actually respecting that area on that trend line. It's respecting it, which is good. It's not as strong, but it is actually good though, really. So, but otherwise, that's how I do it. Let's see, what was the last step? Okay,
Breaks the trend line.
yeah, yeah, pretty much breaks the trend line. Because okay, so let me so basically, like when you're sometimes on these reversals, the steps can be different and a different alignment. Okay, so what I was saying tonight on this one here, it could be a lot of times the first one is always the indicator of a reversal candle, okay, like a doji or something like that. That's usually going to be your number one sign, okay. And then the other one is usually, it can be your up arrows can start popping in. Usually that's your second one usually, but your third and fourth one can be backwards. They can actually be backwards with this whole thing too. It could, like this one here, the blue line crossed over the red. You know, um, After, we broke and closed above our trend line first. I have had it happen where it's been the other way around, where it finally the blue line crossed back over the red and it's above the trend line. I've had that happen before. So it can be those last two steps can be either way. So you just got to pay attention how it's actually setting up, how the market's running, how it's setting up. So it can actually be those last two, three or four on the steps can switch around a little bit there. So let's see. Jason got it down. Thank you for putting that in. So reply to your four page. Yep. Okay. All right. So we're all good here. Thanks, Jason, for answering some questions. So basically now we're gonna go in and say, hey, all right, we are gonna take a trade. So we're gonna follow the steps. With this training is gonna be all from this steps right here into the market, and I'll show you some different ones here in a little bit. But I'm just gonna take this since we're gonna walk you through this whole thing, this whole trade. I'm gonna walk you through this here so you can actually see how it's actually done here in the market. So say we waited and got in towards the red candle here, okay? So first thing I always do, I always go in and I get my stop loss set. Or I should say put my entry in where I got into the market, type it in, make sure it's all good, say, hey, we got in. I'm off a little bit, say I got in 1961.20. Okay, and I'll click here off to the side, it adjusts automatically. Come down here to my stop loss, I'll hit 50 on my stop loss, and then I'll hit okay, we're out. Okay, we're good to go. I got that. Okay, and I leave it alone. I don't touch it. I do not touch anything else. I could come up here and I could, if I wanted to, I could come up here and say, hey, there's my 200 pips. Hey, I'm just looking for 200 pips. That's all I need. It's 200 pips or whatever. But we could take this there's different levels here in the market where we can have TPs into the market. Okay, these areas here, like this here, I'm gonna, let's see, let me hold on here. Let me mark this, and I'm gonna, so like this area here, that did not work at all. That did not work. That's not what I was. Well, I don't know. Maybe they changed it. I don't know. But like this area right here is a TP area. Okay. Then we do another one. So this area right here, that's a TP area. You can keep going with these TPs and just mark them up right down the line here. That's exactly what they're. Here's another one right here. It's a shorter one. If you guys wanted to take a shorter one, you could do that if you wanted to. You can take, so these areas right here, boom, boom, boom. Those are all TPs, areas where you could go into the market at, setting it up. So if you came, and how I do it, I get my horizontal array out and I'll mark. So you can mark, some people, and this is key here too, some people will mark top of bodies, some will mark top of the tallest wick. So it just depends on what you want to do. You hit wick. I'm gonna change this color. I always change my color to like green for like a TP. That's how I like to do it. So, and then I'll go and mark all these here. So I'm gonna take that one off, and I'm gonna take this one off. I'll take these off here quick. So just give me 1 second, and I'll mark them. So, and go off of a wick up here. You could go off the tallest wick of this guy here. And that's where you can determine where you want to take your TP from, where you take your take profit from. So our first one down here, what is it, 152 pips. Okay, you could have done one down there for 152 pips. Next one is about 260 pips. The next one, 380. The last one, it's roughly 440 pips to that top. Okay, and that's where I would have that tallest TP too. Yeah, it did surge up above it and it kept going, but that's actually re-entering different for another trade down the road. So you want to just take this up to the fullest max of what it's giving to you over here for TPs. So this one here, you rode this one up for quite a ways for 440 pips. Heck yeah, that's a pretty good trade. That's a 1 to 8.8 risk to reward. That's an actually pretty good one right there with the 50 pip stop loss too. Depending on what stop loss you want to run too. But a lot of the my 50 pips almost on my blue line down here. It's a little high, but you could have moved it down. Could have had that spread open. It's going to knock your risk reward down just a little bit. But this is how I trade. Everybody can trade different. Everybody has different stop losses down here. So if I went down to roughly around that my blue line, I would have had a 64 pip stop loss down there. And then it knocks it down to 6.87 instead of an 8.8 risk to reward. But you're still gaining your 440 pips though, which is awesome. So that right there, like your TPs, those are really good. So here's how I usually do my trades. Okay, everybody can do them different, and I want to show you guys different ways how to do this. So you guys are getting for the most potential out of your trade of most pips that possibility you can get. So now we know my highest TP is 440 pips. Logic, yes it is. 100% it's logic to hit that take profit. Why not set your TP up here at that 1965.60? Why not set it up there? Why not just do it, and be fine? Say we got it in there, on this one here. I'm going to show you a couple different examples. So we got it. We're stuck into here, okay? All right, so we're up, this one here we said 152 pips, right? We're up 152 pips into this one here. So what we're going to do, what I want to show you guys, just in case it gets up into here like about 175 in the profit, we're like, whew, we're doing good, we're looking good, we got And all of a sudden, boom, this thing just melts and starts going back the other direction. All of a sudden, boom, we hit stop loss. We're like, what happened? You know, I lost money. It reversed. It does it happen? Absolutely, it does happen. You know, that's why we never know how far up. Who knows? This thing might not even cruise. Got up to here, and it would have stopped and then moved down a little bit. And then went up. But now we know. Let's move our stop loss up. We're up about 100. I always do this now, and I've been telling a lot of people to do this now too, in the group, because I was up so big. I was up 150, 160, and it reversed and went down, hit my stop loss, and I lost. Well, let's move this stop loss and get it up into. Let's take this stop loss and get it up here about 25 pips into profit. And a lot of people teach, move it up to break even. You move it up to where you got into this market at 1961.20, where you got into the market at. A lot of the times, if it goes back down there and hits it, okay, you're gonna lose some. You're gonna lose. Your fees are gonna be in there, and sometimes if you don't adjust your spread, you're gonna lose a little bit of money off of that, just a little bit. I mean, it's not a lot. It's not like going down and hit a 50 pip stop loss. You know what I mean? But if you move this up about 25 pips into profit, you are gonna have. And then you're like, okay, it went down there. If I hit 25, if it hits that 25 pip, your spread's covered. Your fees are covered. You're not gonna lose no money. You actually come out just a little bit ahead, and then you go look for another trade. It's okay. You're not losing. You're not losing that 50 pip or 100 pip, whatever you had set in there for 75 pip for a stop loss. You're not going to lose that. So, and the best way to do this too, I always come to my measuring stick over here. I always like to come, get right close as I can to where I'm at, come up where and get close as I can. I can get about 26 right there. And what I'll do, I'll come across here, put my line in there. Guess what? All right, now I'm going to go and hit modify on your computer, on your phone, whatever you're trading off of, whatever MT4, MT5, hit that modify button, go up to your stop loss. You're going to put in 1961.45 and then hit modify, boom, and just let this thing ride. Let it go, too, on something like this. That's how I would do it. I wouldn't, so it doesn't, wouldn't turn around if I only got up, say, hey, we're shooting for, I want my 200 pips. I want a 200 pip. I know a lot of people shoot for 200. There's a lot of times I shoot for 200. That's basically what I need in the markets. Sometimes I get a little greedy, but anything over for 200 for me is a little greedy. So, but 200 pips for me. So that's why, if you set this and it gets up around here and all of a sudden, reverse, it's starting to melt down. Doesn't matter. You got your stop loss up in here in 25 pips in profit. Comes down and taps that, close the trade out. You're not losing any money. You're actually coming out just a little smidge ahead. Your fees are covered. The spread's covered. You're all good. You're not going to lose any money by doing that. You're all set up to go. You can even pull it. I'm just saying 25 pips. You can go a little bit more. Say, hey, I went like 30, 35. I'm more comfortable with something like that. You're going to get a little bit more profit out of it. And then guess what? And then if it does hit it, hey, all right, let's go look for the next setup. Boom, you hit another one. Boom, you go. And you hit that big one. So you're actually never taking a loss that way. If it does that, you're actually you ended up with 2 wins. Still comes down, you hit your 30 pip profit, 35 pip or 40 pip profit. That's still winning. You're still making a little bit of, you're still growing your account. And then you hit a 200 pip. Oh yeah, I'm up 2-0, done for the day. You count that as a win. Count that little 30 pip as a win. Win's a win. So that's how I manage those trades like that by far. Doing that. And then if we go up to 400, say up to 440 pips, now we're getting up, now we're climbing, up into the market. You can actually do this too. All right, Say the market, we're up to this 260 range, okay, and we're gonna keep going. So take that stop loss. I'm just gonna move this up. Stop loss. We're gonna move it up to this 1962.72. That's the next one. We're moving that up to that one. So if it comes down and hits that, hey, guess what? You got 100. I think it's 150 pips, 152 pips. Boom, good to go. So this is a trailing stop loss back up now. Okay. So now we would say, hey, all right, it's climbing, climbing. We're getting up here to the 370, 377 range. And I probably can't. I can drag this up to here. Let's go back in, modify. Let's move this up to here. It's climbing. We're climbing up into here. Hey, I'm happy with this right now, looking good. Then all of a sudden this thing, all right, my TP is set at 440. Where I'm just keep my TP here and let this thing just ride on out to the sunset. Let's go. Boom, smacks it. We're good to go. You could only move it like, you moved it 3 times. You modified your order of your stop loss 3 times in that trade to do that. That's all you would have to do onto that trade. Pretty really, really simple to do on a trailing stop loss like that. It's pretty easy to do. And I know Jason has a different way. He has a thing on his stuff too that automatically does it for you, right? Jason?
Oh, sorry, I have my mute on. No, actually, what mine does is it sets my top. The way mine is set up, it sets my take profit and my stop loss immediately as soon as I hit trade, because I know where it's going to be.
Yeah.
But I trail my stop loss just like you do.
Okay.
Um,
Okay.
so if I'm trailing like that, so, because I want to make sure I don't. I've had too many trades turn into losing trades because I didn't bring it just enough into profit, and once you're trading risk free, who cares if you lose it? Who cares if it comes back and hits it?
Right. Right.
You've still, all the monies that you've made prior to that are still there for you to trade another trade,
Right.
and there'll be another trade.
Yep, absolutely, absolutely. Yep, exactly right. So that's exactly how I would take this trade off of this one here. I would have set it mine. I would have seen this and I would have said, boom, I'm gonna do it up here, and I would have done a trailing stop loss all the way up this thing. I would have stopped here about up to here and just let the rest of it ride on out. If it came down and hit it, came out and touched it, whatever. I'm still up. That's still 250, 260 pips or whatever. I'm still setting really, I'm not going to complain about that. That's better than 200 pips that I usually shoot for a lot of times. So, that's a good, this is exactly a good way how to manage your trades off of this stuff here. So this is, that's what I really recommend doing. A lot of people shooting for 200, like I say, and people only want 200. Let me go back in here and get this here quick. People with this 200, I would just bring this thing, bring it up into, I gotta see here where I got this, got up into, hold on, being a little stubborn for a second here, hold on a second. Bring it up about, if you brought it up, like I say, it doesn't, like, I'm just, 25, I wouldn't go below 25. I really wouldn't. The more you go up, the better it is, obviously, right? Because if it does come down, you're gonna gain more. That's more, But if you do like even, a 40, a 50 is okay, but on the 200. But sometimes the way the market moves at times, volatile the market, it gets some spikes down and back up. That's why I kind of like, I 50 is not my, I wouldn't, I'd be in that 30 range, probably 25 to 35. I would keep that in that range. That's what I would do. I wouldn't go below 25, really. So even if you did it around, say, try to like close as I can to 35. Sometimes you can't get those. It's pretty tough. So, then
Oh,
you're moving. So like on a 200 pip, And that's all I'm trading off a 200 pip. Come up to here, and then modify your order and put it in the 1961.53, and let the trade go, let it ride, on a 200 pip. So that's exactly how I would do it.
So if I remember correct, Clayton, on a trade where you're doing a buy, when it comes back down, the actual bid line is going to be closes it not to ask. So it's going to hit before the ask line gets down. So you don't your spread there is about right. The other thing on an Osprey is to remember it is if you're trading a lot size of one, it's $7 per lot
Yep.
is your commission. So you can figure that down and up based on that. So I always want to make sure I cover the commission and cover my spread. The spread really makes a difference when you're doing a sell because you've got to go a little bit deeper into profit on a sell than you have to on a buy. I just think it's just funny the way it works,
Yep. Yep.
but you do.
Yep.
So always be aware of that. Um, just to make sure that you don't forget where it closes. It closes, the buys close on the bid, the sells close on the ask when they come back up and hit or go back down and hit.
Yep. 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 Absolutely. Yep. So that's how I would. That's how, if you're just taking 200 peppers, this is exactly what I would do right here. This is exactly what I do a lot of times. I've been doing this quite a bit here. Been having a lot of people like, hey, I'm, it gets way up there. Hey, it's reversing, hitting my stop loss. I go, move that thing up, get it up into profit a little bit, cover your spread and stuff. So if it does go down, if you're doing 200 pips, then you're not going down and hitting your stop loss and then you're losing money. You're gaining a little bit here. You're covering your spread, you're covering that fees, and you're good to go. You don't have to worry about it. You're good to go. So that's basically I recommend everybody learning how to do this and doing this properly. I mean, this thing, 200 pips this here, it didn't take very long before it hit 200 pips. Time you got in 1, 2, 3, 4, 5, 6, 7, 8, 9 minutes. Really, all that one took, that trade to take before you hit your TP on that one. That one, I mean, it had 9 minutes. It had some good volume. It was pumping, for 9 minutes of trading. That's all it was for 200 pips. Pretty simple. I mean, really on up here, you're in for a little bit longer, obviously with the 440 up here. But again, you are, it's still pumping, and you can see where it kind of flattens out, and then it pops up and goes again. It always has to flatten out a little bit because it went up for a certain amount of time straight up, a lot of blue candles. Then it's got to consolidate a little bit, as you can see, dump down just a little bit, and then it gave a nice little push up, boom, gone. So it just came up to this structure area here is where it came up, and it was respecting it, and then it gave it one more push, and it got up through. If it never closed here, sometimes depending on your broker and where you got that thing set at, it might have not spiked up and like not quite closed, and and you still had your stop loss moved up to here, could have hung in and definitely would have broke over here. You would have been in just a little bit longer. Sometimes it happens, sometimes not. Sometimes it does that to me too. Where you have this set, and you can see, oh, it wicked through it. It should have hit. It should have stopped it. But sometimes on your broker, it just didn't have that extra little push to get through on your broker. So it does happen. It's happened to me. It'll happen. It happens to everybody after a certain while. You'll notice stuff like that. So that's a really, really good indication. Like, okay, I'm just gonna stick with it since my stop loss is up there. If it comes back down, hits it, oh well. It's still up good. So let me go over to here. Did anyone catch that? Right up. I got 150 pips. Awesome. People are trading.
Sorry, that's why I missed getting a couple of people
I
in.
see. I see how you are. I see how you are.
I am too.
I got someone sitting next to me too that took 150 too.
Kind of listening.
Yep. So this is base. I mean, it's pretty straightforward. I mean, just telling you, it's pretty straightforward, and and it's pretty simple. So what I want to do next here. Give me 1 second. I'm gonna delete some things off of here. We're gonna start all over, and it's basically. And I want to show you, like, guys, different ways, too, of this. Like, hey, we're gonna, this is another reversal on the way back down. Okay. I'm just going to run, I'm going to do a quick little run through this here, respect everybody's time tonight. But I want to show you this one too, because this is actually another reversal back down. Because it is. You're taking two reversal traders. You could take a sell down here and then a buy back up again. So basically this is like two great reversal trades right here. So yeah, you could take it down here, go way over here like this, off of it. You could do this one right here like that, which you're way over here. This one here, and this one here to me is a little sharp. To me, I don't really like this one. The more sharp ones, the more steep ones up are not the good ones to break. You need the ones that are more like a flatter angle. You don't want these steep ones. You do not want these ones here. You want something like this here as it goes. So basically, right now, as you see here, so basically, what's our good indicator? Where's our reversal? This candle right here. So basically, this candle. This guy right here, that blue one, right there. That is our first indicator sign of a reversal. That is a reversal candle, right there. Long wick, very short body. That's about a maybe not even a quarter of what that whole candle is. So that's telling you, okay, this thing is good reverse. We had a good engulfing candle back, or kind of engulfing candle back down, as you can call it. But that blue candle right there is a reversal candle. So that's one. That's the first step. Okay. Now we're cruising over. Now we we should be getting down arrows popping in here. Now we're going back up. We should be getting some blues back up. Blues, blues, blues. Starting red. There's red candle start to happen. Or red down arrows starting to happen in this area right over here. That's two. Okay. Blue line crossing over red. 3. Break and close below our line. 4. Take trade. 5. Take trade off this blue candle. You can take that trade off that blue candle and you'd be fine. You should be fine, ready to go. Let's check it out. If not, not a big deal. I'll show you again. So if you're going to take off this candle here, you're probably going to be pushed down, probably about down into there. Come in here, walking through these steps. This is a little slow for me for what I do. Make sure you push this in here. Boom, you're good to go. Okay, that's a 50 pip. Okay, look, anybody see what happened so far? Anybody see it?
Yeah, you got stopped out.
Correct. Perfect. Good. This is what I want to show you here. Okay, no problem. We got stopped out, right? We probably got backed out back here on this candle right here. As you see, it came right up here. It would have probably stopped me out. Okay, not a big deal. Not a big deal. This is where you want to be patient, because it came up, got me, whatever. 50 pip for me, and that's even back up to that blue line right there. Okay, some people right here, I know a lot of people. Jason is one of them. He does a higher one.
Yes, I would have had a higher stop loss.
Yep. So even going back up to this red line, 69 would have been stopped out. No, never would have been stopped out if I would have had a higher stop loss set in. Okay, so that's just an example. That's a good example there, showing you of different stop losses. That okay, yeah, it's okay to use these blue line, red line for a stop loss. That's fine. I'd rather have a lot of people do that. So their stop losses are going to be like different numbers. Jason, I don't know if he could do a 69, probably a 70. something like that.
It would have to be 70 at least. I'm not doing
I
69.
knew it. I knew it. Can't do those
No
off.
67, no 42s.
Right. So now, okay. Now what are we looking for? Now we're looking for our TP areas, right? We're looking for TP areas back down over here. Okay. This is a good example. This is absolutely the best example right here. Is absolutely perfect. Okay. So let me get my horizontal ray out. Boom. Here's a TP there. There's a TP area right here. There's a TP area down. You could go wick down there, body down there. There's another one like right in here. So there's different TPs, right? Market never got down that far, did it? But does it matter though? Say, hey, I'm gonna shoot down here. I'm shooting at 540 now. We're shooting for 100 more pips over here in the market. Guess what? Okay, this thing, oh no, we got a little scared, a little crazy, almost got stopped out. Okay, and now we're going. Okay, now we're starting to flow down. Now we're starting to flow down. Okay, now we're moving. We're getting down. We got a good push down. We got a little retracement back up. Boom, it's starting to head back down. All right, now, okay, say we're there. Now we want to move our stop, go in, modify, move our stop loss, right? So we want to move our stop loss. So get her close to our line. We want to get it about, say, oh, that's pretty close to 35. Come right there, boom. Okay, hit modify, we're good to go. And modify your order. We're right there, we're cruising down, okay? So if this thing does turn around and go, you know, we should be fine because it never really came up and hit our line up into here. It never really hit it. So we would have been good to go from there. So as we're moving in a profit, this thing's really dropping now. We're going. Say we got down into here. You could move this. So here's another touchy little area. It says this line being close to this line like it is, that's not a very far spread, right? If you measure this from here to here, that's 105 pips. That's not very much, you know? That's not a lot. To me, that's not a lot. 105 pips, because 105 pips, they can move in the market really easy. 105 pips. Take one candle, it can move 105 pips easy, you know, into the market. So a lot of times what you could do is say, hey, I want to move this down, you know, from where I am at here. Say, hey, I'm going to move this thing. I want to move at least, you know, 150. Just say you want to move it 150 in a profit. Went the wrong way. There we go. So you can put your line up there. That'll be your next time you move your stop loss. Go in and move your stop loss up to this line here, which is roughly 161.78. Move it right up to there. Move your stop loss up to there. We're cruising down. You got room for it to breathe in here. So, and then, you know, okay, we got it set here, you know, to say, hey, we got it set all the way down here, but guess what? It never went down. Guess what? You got it up to here, and then say, hey, it moved down to this one. You could actually, if you really wanted to, you can move this down to here to make it a little tighter. The time when it comes back over to here, guess what? It's going to come back and hit it. So you only ended up with a trade of roughly 217 pips, 213, roughly around there. That's what you would have ended up with when it came back up and came back and hit over here. Okay? But
and you close and immediately go into a buy because you see
the potential trade on the other side. Because a lot of time when you're in a trade and you see a down pattern like this, just giving you a little hint here. Here's how you trade this. If you're going to be, when you get going and be an advanced trader like this, you're going to be into a trade. You're going to be going, okay, I got a little time. Guess what I'm going to be doing? guess what I'm going to be doing? I'm going to be drawing lines and getting ready for maybe another reversal in the market and have this stuff marked up on your chart, watching it so you know if that thing bounces back up and goes, because it's going to bounce you out here. Guess what? You're already watching this. Okay, I got a reversal down here. You're looking. We got a reversal candles down here. Guess what? We're going to go into a buy, going straight into a buy right away. That thing hits your stop. Things hits your stop loss because you moved it up into profit. You hit 270 pips. Now you take it back over here. You're going to write it up for another 440 pips. Hit your TP. You're up 600. You're up almost 700 pips off of 2 trades, just like that. That simple. Okay. That's how bang bang and how fast it can be when you're looking at stuff like this. So you always want to watch this stuff happen. So if you did get into a trade, you say you got into this blue one, like we said, we're up around right there, Jason's favorite number, and then you hit this trade here, and it stops as it comes out, stops as here, because we have our stop loss moved up here. And it stops us out 272 pips. But you're watching this stuff down here. You got to make sure you can be able to see. Let's say, okay, I see it starting to reverse here. You're not even paying attention to the trade you're actually in now. You're just going to let that go. Okay, you're going to let that trade go, and then and then all of a sudden, boom. Okay, it's my line. Okay, I see the reversal. See the candles. Blue lines or the blue arrows are starting to go back up. We got our break above, closed break, closed above our line, open above our line, and the blue line crossed over the red. Boom, take the trade for a buy going back up, and then you're doing the same thing over again. So boom, we're getting rid of all this. So now you're getting rid of all that. You go in here, you got that one off. Boom. We're coming over here like this, coming in, set up my prices in there. That was the same price I put in and put down to 20 earlier. That was pretty good. And then you're going like this, hitting 50. Boom. Okay, you're good to go. And then you're deleting all these lines, and then you're finding TPs off this other side, marking them all up. Got your TP set up here. I'll say, all right, I'm going up there and doing your trailing stop loss all the way up. Hits that 440 pips. Boom. 2-0. I'm say, hey, I'm cashing out for the day. That's good enough. I'm over 600, close to 700 pips. You'd be 657 pips is what you would have caught off of those 2 trades. Right there. Done. That's quite a bit of pips. That's good. I mean, that's good enough for me. A lot of people will take that any day, off of 2 trades and be done, So very simple way to do this, too, because you got to make sure you delete all these. Make sure you don't delete these lanes off here. You can say, hey, I don't have time. I want to go find my TP areas off this other side and just start going, and delete that off of there. You just want to start finding all these TP areas all the way down here where you want to hit. So there you go, boom. So now you're right back up to here, close to it. You hit that one, you're done. Say, hey, I'm done for the day. That's scalping the market right there. Doing 2 reversal trades, 2-0, 657 pips. Call it a day. Pretty simple. That's how I would. It does happen. Like right here, this actually, if a guy was on this and advanced, reading the market's been on for a while, looking at stuff like this, bam, 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 would have been done. Even if you would have took a 200 pip over here, said, okay, you can mark your trend line up, take your time, boom. You could have caught this trade back up on the other side. You would have been good to go, So that's exactly how I do it right there. Sometimes it does happen like that. You catch trades like that in the market. So let's see, John. So only thing worse is getting stopped. It's a huge loss. Exactly correct. Exactly correct, John. But that's exactly how you take reversal trades, do your stop losses. I recommend doing your stop losses like that now. Make sure that thing's up in the profit. You know, if you're doing 200, get that thing up to like 30, 35. Put your stop loss up there, and then you know it's good to go. And then you're fine. So that's exactly how I would do it. So doing this here, do your trailing stop loss and start moving this thing all the way up to you could even make it put it up here, but more likely you would keep it down here and not even move it again. That's what I would do recommend on a trade like this, just because of the spike around it does. Keep it. Just don't try to get too greedy unless you see something like, oh, okay, I better abort this mission. I better get out, and you get out like up in this area up here. You're gonna take a little bit more. If it doesn't get up to your 440 up here. So, but otherwise, that is exactly how I would do this style of trading on reversal trading styles here. Okay, so I did cover tonight. I did cover quite a bit tonight and everything. So that's exactly how you would take trades like this here. So, but otherwise, guys, I'm gonna
Hey, Clay, one quick question. What are you looking for in the reversal candles again?
reversal candles.
Yeah.
Okay, so this one over here, for this one to go back down, you're looking for like a long wick with a smaller body on the bottom side of it,
Okay.
because that's a rejection of the buyer starting to come into the market is pushing it back down, and you want that small candle body on the bottom side of that long wick to the top. That's one thing to look for. Engulfing candles. If we had a big red golfing candle up here, that's another sign of reverse. Of the market. And there's different actual dojis and signs that I can do. I'm working on something, putting a little thing together for everybody to have, so you know what these candles mean, what they look like, what the names of them are. I'm gonna have a little thing put. I'm gonna try to do like I'm trying to put a little like PDF or something together for people. I'm gonna put it into the Discord and stuff for people to have and study this stuff too. So like down here too, this one's even harder down here at this bottom, looking for an actual, reversal. You can say, all right, this blue one down here is golf this little tiny red one.
Right.
You could say this red candle here. To me, it would have been more of this red candle for me because of the wick of the body. The wick and the red body here. Is shorter. The wick is longer, candle body shorter of it. So that's telling me definitely it's going to reverse right there. And so, yep.
All right. Thank you.
Yep, absolutely, absolutely. So I'm gonna stop recording here. Oh, I stopped share. That's